Welcome back to the Money Effect, where we discuss the major finance and news topics of the week. And this week, I guess the only place we can really start with is this new Bitcoin ETF that's been launched. And as you can see from the title, I guess it's two things. It's changing the game for cryptos, but also investors should be wary. So, give some bit of history. What is an ETF? So, in a general sense, an ETF is what we'd call an exchange traded fund, and it's basically set up in a structure where it mimics a real asset. So, you could really have an ETF on anything, but the main examples we've seen ETFs are on ETF on the FTSE 100, ETF on an S&P, and it's basically created in such a way where, give or take, it will literally just track the performance of that index. So if the FTSE goes up, the ETF goes up. If S&P goes down, the ETF goes down. Now, obviously, this differs from, say, a traditional fund, which might have, you might have a fund which has the top companies in the major indexes. So obviously, it should, in theory, kind of move in line if those companies, make up 70% of the index and you've got a fund that holds 70% of the index, when those companies move, the index moves. So it should move in line. But with a fund, you can't buy and sell it like a trust. This is actually going to be listed. You can buy it, sell it like a trust, and obviously it's supposed to be to have low fees. So crypto has kind of been looking for that next step, I guess, to kind of make it official. One of the problems it's been having is that the regulators don't really, at this point in time, well, either they don't see crypto as something that's real. People have claimed it's a great big Ponzi, or even if it is a great big Ponzi, it's not something they control. And ultimately, anything in the financial industry, any financial product, you know, a regulator, the SEC, the UK regulator, any they're going to want to control it, and they've been having they don't want to launch any official products linked to crypto because they know at the moment it's lacking controls. So we've got the first product now which has been launched, which is the Bitcoin ETF. And I'll read you so from this is the ticker symbol. As you can see, ProShares Trust. It's actually a bit deceiving that it's called ProShares Trust because it's an ETF, not a trust. Um, Ticker symbol BITO, and as you can see, launched this week already. Maybe quite volatile, but if you look at the price of Bitcoin, for example, it's six in dollars terms is at 61 today, but obviously this is at 39, so it's not obviously like for like. It's just meant to mimic the price of Bitcoin. So I'll read you the definition from ProShares directly. So ProShares Bitcoin Strategy ETF, ticker symbol BITO, is the first US Bitcoin linked ETF offering investors an opportunity to gain exposure to Bitcoin returns in a convenient, liquid, and transparent way. The fund seeks to provide capital appreciation primarily through managed exposure to Bitcoin futures contracts. In small notes, the fund does not directly invest in Bitcoin. And I think that's the key element that we really need to understand here. And I guess that's where this article is going, is that, as an investor, you really need to be wary that, this does not directly hold Bitcoin, and this ETF is meant to mimic the price of Bitcoin. And in this particular ETF, it's actually based on futures. So it's not even based on the spot price. So You know, we've had people that have tried to do this, the people that, co-created Facebook, the Winklevoss twins with Mark Zuckerberg, they've tried to launch ETF unsuccessful. And this is the first kind because it's based on future contracts. It doesn't directly hold any Bitcoin, and it's easier for the SEC to regulate it, and that's why it's been approved. Um, I think the way they're gonna this ETF is going to go about is, it's going to have treasury yields, which are like money market instruments, and it's going to have, 30 Bitcoin futures, and altogether using some sophisticated method that the financial industry always comes up with. which nobody knows. It's going to mimic the price of Bitcoin. Supposedly, Bitcoin goes up 5%. This ETF goes up 5%. And what benefit does this have to you? I think that's obviously going to be the key point. The key point that they're trying to say is that obviously it's regulated. With regulation, at the moment, crypto is not regulated. If an exchange goes down, if you lose your crypto, there's no kind of recourse to get that money back. Whereas, this product is indirectly linked to Bitcoin, is meant to mimic the price of Bitcoin. And if something happens with this ETF, the ProShares ETF, there's recourse for you. There's going to be things in place for you to get your money back. Obviously, yeah, if an exchange goes down, they'll go through a whole administrative process, something that's standard in all companies. But there's no really chance you get your money back. But things that are regulated, in the UK we have the FCA. They offer you, I think it's upwards of 50,000. If you lose money in a company that's regulated, you can get recourse as such. So that's one of the appealing natures of this. Obviously, again, tied into that is the fact that although we've seen Coinbase really become mainstream now, there's a lot of other exchanges. We have seen some problems. Binance has run into some problems. So a lot of people like to keep these cryptos in their ledgers, but these ledgers, if you lose your passwords, you can't get access to the cryptos. There's been so many stories, from years ago where people have had their cryptos offline, and obviously where crypto wasn't so mainstream, they literally just forgot about it. And I'm talking about small amounts. I'm talking about somebody might have, used Bitcoin for, dare I say, an illegal transaction. They had £100 worth of Bitcoin 10 years ago, literally just forgot about it. It's only £100. That £100 now could be worth thousands, if not millions, and you haven't got access to your ledger. And there's really no way you can, you know, get that Bitcoin. Obviously, putting it on exchange makes that a lot easier, similar to a bank account. But then obviously these exchanges are not regulated. If I lose money in my bank account, you know, I just go to the bank, they'll insure me, and if worst comes to worst, that bank goes bust. If I've got a certain amount, like I said, up to 50, 75,000, FCA will compensate me. With putting your money in these exchanges, that doesn't happen. So obviously, it's easier to regulate this ETF, and that's why it's been approved. And for yourself, you don't have to worry. Similar theme as when gold ETFs started coming about. Obviously, first of all, if you have a lump of gold in your house, that's going to make you potential target for a victim. So probably not the wisest thing to do. But storage costs to hold. You could put your gold. You could. There's places to store gold, but obviously storage costs, those add up, and they start eating into your profits. So people decided, what, we're gonna come up with gold ETFs that mimic the price of gold, and then you just have to invest in a gold ETF through your broker, and you don't actually have to physically hold gold. But then when gold goes up, you get the benefits of it, but without actually having to stack gold bars in your house. So this is kind of similarly the same kind of thinking behind that. But the issue is here, this ETF is not at the stage yet where it's directly tied to Bitcoin, because as it even says in the ProShares, document, it doesn't actually directly invest in Bitcoin. Whereas the gold ETFs have got to the stage where they have futures contracts as well, but now they've got to a stage where they will differentiate and tell you these gold ETFs are physically backed by gold. These big companies themselves actually do buy the gold and then hold the gold in vaults, where obviously because they've got such large amounts of it, they're getting good discounts on storage fees, and then they're creating these ETFs on the back of it to give you exposure. So these gold ETFs are backed by something. This Bitcoin ETF is not backed by anything. It's backed by future contracts. And with that comes a whole load of other issues. Um, you've got something called contango. I won't get into that, but that's if you don't even know what that means, this is just really not for you. You've got futures that roll over. These are things not within your control. Obviously, there's management fees and the infamous short selling. You know, you're gonna you can't short sell crypto. It's either you buy it, hope it goes up. That's it. But with an ETF, as we've seen, you can short sell it. So now you've got all that kind of risk into it. So it, it's a good start. I think the mainstream. It's a confusing one for me because I think people want to make crypto legitimate. Now, these people might have their own agendas for doing that, but in essence, they want to make crypto legitimate. They see crypto as a new asset class. They see it the future. Potentially one day could even take away the dollar. Who knows? Everything had to start from somewhere. We had back in the day barter exchange. Then you've moved to like physical commodity exchange. And you've had gold exchange. Then currency was created. Why wouldn't digital currency be created? It's not within the realms of possibilities. Technology improves, time improves, you know, things happen. So this could be, maybe well, we hope in our generation, um, but in future years we're going to start seeing. At the moment, yeah, it's a bit unlikely Bitcoin will be the one because it's so volatile and it's one Bitcoin is 60,000, so it's a bit hard. There are shops and stuff that do accept Bitcoin as a medium exchanges, but if you give away a percentage of your crypto and then one day crypto goes up by 1,000%, you're upset now because you paid for something and you've lost out. Whereas that could go the other way around for the person that's accepting your crypto. So potentially Bitcoin is kind of seen as the more symbol, but there will be cryptos and they're used. I won't get into it, but there's a lot of cryptos used. We've seen the whole NFT buzz about arts of Ethereum, the blockchain. There's so much stuff going on in the back end that there will be, a lot of practical uses for crypto in future. But then also we've seen a lot of, Dogecoin, we've seen a lot of, meme cryptos that really have no use. So, that's what they're trying to get to. And obviously getting the regulatory approval is a stamp of approval. Now, one thing that worries me one thing is that obviously this ETF doesn't directly hold Bitcoin. So that's the next stage now. The next stage is now they want to get an ETF passed that actually directly invests in Bitcoin. And I think we're still a bit off of that because crypto is so volatile, and again, it's not regulated, and the exchanges want to kind of control it. And then obviously the second thing is, the whole crypto universe was created as a way of, moving the mainstream finance, to the public, so it's not, I'm not even going to go into it. We've seen so many incidences of corruption in finance over the years. Companies go bankrupt, investors are losing out. It goes on, and obviously crypto was meant in a way as to kind of be for the people. So, it kind of does work backwards if that does get regulated, and now you've got the Securities Exchange Commission holding it and things like that. So, but that's where we're at right now, and definitely, me personally, you really have to. I can't advise you. I'm not an advisor, and like I said, I'm not giving advice. It's just news, but this is just one thing you have to be. I'll just like people to be wary of, which is the main thing, which hasn't really, in my opinion, been highlighted in the mainstream news. That you need to understand if you are a Bitcoin enthusiast, that this is just something that's mimicking the price of Bitcoin. It doesn't directly hold Bitcoin. And with that, there are a whole load of things you need to be worried about. Like I said before, contango short selling. So if you're somebody that's looking into this and thinking, what, this is a good way to get into crypto exposure and something that's regulated, be wary that this does not hold Bitcoin. And that's very important. And now the crypto market itself is becoming mainstream. You've got obviously Coinbase has gone public now. When you become a public company, you're regulated. There's so much scrutiny to file reports and things like that. So in a sense, Coinbase is a safe storage place, and there's more exchanges. FTX is another exchange which is trying to potentially do an IPO. You've got PayPal offering crypto exposure. PayPal is one of the biggest digital wallet companies in the world. Like you use PayPal to shop on eBay. So there's and that's official. So there's so much safe ways to get into crypto that you potentially don't need to get this Bitcoin ETF. But if it's something that you want to do, just be wary. But me personally, I wouldn't. It's not something that I would be interested in. But what I am interested in, and again, I will just digress. Digital World Acquisition Corp. This is a SPAC that's just gone public, and apparently Donald Trump. It's got some link to Donald Trump. Literally, it's just a SPAC blind vehicle. Nothing has nothing at the moment, and look at it's gone up 100%. So this is the kind of things that you have to be worried about in the finance world. Somebody's made a killing. I think it went up to 200. Someone has made a killing, for nothing. So let's be wary. But as we can see, this is the price of Bitcoin, and this ETF really, I think it's been muted now for officially been muted. Well, crypto went all the way to 30. I think it's officially been muted for probably about a month now. And you've seen the rise now, up to 60% since this ETF, because it is kind of a stamp of approval where the regulators are saying, you know what, this crypto, we can't really stop it now. It's a point of we need to control it. So that's kind of an approval for people to say, crypto is legit. And we're in October as well, which is the general alt season. So, we've seen big rises in Bitcoin. A lot of people are saying Bitcoin's going to hit 100,000. Maybe it will. As you can see, big crypto is very volatile. We passed the all-time high here, and then, we lost 30% or 50%, sorry. So this is a volatile asset. Ethereum now is probably on the realms of being more of a big cryptocurrency than Bitcoin. And, we've seen again huge rise this past 7 days from, passing all-time highs. One thing we haven't seen though is the altcoins. The altcoins again, they have risen, but they're not nowhere near. If we look at all-time highs of say Litecoin, a coin I like, we're at 360, we're here. So we haven't even seen that. And generally there is a lag between the major cryptos now, which was Bitcoin, then was Ethereum, I think is a major crypto now, and these kind of altcoins. And potentially, we're going to start seeing these coins start following. There's going to be more ETFs, futures, I believe, that's going to come to the market in the next few weeks. They're going to get approved. So you're going to start seeing a raft of them. And obviously, people are working to get that real ETF that's directly linked to Bitcoin. So we potentially will see that soon. Bitcoin Cash again. If we look at Bitcoin Cash, you're looking at this. Look, we're not what this was. I think this was when people thought it was actually Bitcoin. But if we look at the recent all-time high of this year, we're still quite a way off that for these altcoins. So whether this ETF is kind of the top of this cycle of cryptos, or whether it's kind of now the beginning, and we're going to see. Generally, I think it's between Christmas and they do lag by 2 to 3 weeks, 4 weeks. So Christmas and New Year's, we're going to start seeing these altcoins peak. Looking them. It's a good time if you're somebody, mark this today. This date is the 23rd of October. Mark this down and then say, in a few months, see where these went to get exposure. Maybe they all went back down, but I think this is the start of a run in the alts. And you've got things like Solano, Ether Killer. Obviously, it's a new currency, but this might have way further to run. So, it's meant to be an alternative to crypto. I mean, Ethereum. So, you've got Dogecoin, these meme joint coins. This coin go all the way to here. It's and these things are not even in the mainstream yet. So we could be seeing, a crypto run. But in terms of the new Bitcoin ETF, it's a good start to legitimize crypto. It's kind of, I think we're at the point where crypto is real. I don't think anyone's disputing that. Securities and Exchange Commission, they've basically admitted it now after they were trying to, be against it for a while now. Whether they were being against it because they're trying to save the public from losses because these coins are volatile, which is their job, or whether they were against it because they just can't control it and profit off it, is another argument. But there's so many ways to get exposure to actual crypto, and especially if you're not comfortable with holding it in a ledger. Coinbase, PayPal, these are very secure now. So, and obviously the ledger is always the way to go, but you have risks in itself with security. But then you don't really have the storage costs because it's not like gold where you have to pay these massive storage costs. It's digital currencies. It's just a fact of, if you lose your security details, there's really no way to bring that back oh, maybe there's always a way, but it's not like click on forget your password and you'll be sent an email. It's it's going to be some sophisticated methodology you're going to have to use to get that back. So yeah, I'll just end on that, and yeah, just be aware. This is, you know, this could be a turning point for. It is a turning point for uh, Bitcoin and crypto, and the next stage we're going to see more of these future ETFs come on board, and then we're going to one day get an ETF directly linked to Bitcoin, and whether that's after this cycle goes, and then there might be a new cycle, but I think especially anybody, crypto's here to stay. So thank you for listening to my video, and yeah, like, subscribe, and share. Bye.